Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. We're happy to be back to bring you yet another investor update. Joining me today is none other than Justin Scott, Investment Banking Analyst, and my co-host for today. Welcome, Justin.
Yes, be here, Dan. Thank you.
Good deal. Today we're discussing Express Catering Limited and Dolla Financial Services Limited, and we're excited to share these insights with you. As usual, if you like the content, don't forget to hit the like button to share this video. If this isn't your first time here, then be sure to subscribe and hit the bell to receive all of our notifications. We upload content just like this, just about once per week. Also, if you want to embark on your very first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Okay, up front, we want to take a look at Dolla Financial Services Limited, and I'll kick that over to Justin to tell us what's happening there. What's up, Justin?
All right. Good evening, ladies and gentlemen. First up, we have here today Dolla Financial Services. So Dolla Financial is a microlending institution, the largest using market capitalization metric, and has had the most robust growth over the last 2 years of any of the microfinance institutions. So on June 15, 2022, the company was listed on the junior market of the Jamaica Stock Exchange after a fully subscribed invitation out to the public. Through the listing, First Rock Private Equity sold about 15% of its shares to the public and retained around 60% stake in the company up until July 24, 2023, when around 15% was sold to Supreme Ventures Limited and 10% over to Mayberry, right? So Dolla's listing in the second quarter of 2022 garnered more than $5 billion for a $500 million combined IPO and offer for sale, where the company raised $250 million that went directly to Dolla afterwards. $250 million was sold to the market by selling shareholders, and as I said before, it's one of the most successful junior market listings in the junior market history. I'm really stressing this point right now because I'm going to come back to it later for another point, but let's get into the financials. So at the end of September 2023, Dolla had $887 million in interest income. That's an 87% increase from the $475 million from the year prior, and $154 million in interest expense, 292% increase. That's so significant, but you'll understand a bit further, especially when to get to that point of having $887 million in interest income. That netted them off to about $737 million at the end of September with a 69% increase in net interest income. And operating expenses took around $420 million from there, leaving them with $335 million in profit after tax, and with a net income of $328 million. That's a 74% increase from the same period of last year. With earnings per share of around 13 cents, and with a net profit of $328 million, a 74% increase from the $188 million of net profit from the same period last year. So let's take a quick look at the balance sheet. Total assets is up $117 million, recorded at $2.9 billion, up from $1.3 billion. Total liabilities is up to $2 billion from $644 million, and total equity is now up to $937 million. That's up 31%. Key statistics: the current price of Dolla shares are $2.65 per share. The PE of 15.75 times. That's just a little bit below the junior market PE average, which is around 17 to 18 times in the market on average, and with a book value per share around 38 cents. Its trailing EPS is around $16.82, with a 52-week high of $3.05 from a low of $1.71. So right now, it's just around, I'd say, the midpoint between the 52-week low, 52-week high. But just going based off the 9 months ended numbers with a PE of 15 times, and with the Q4 already being baked in, we can expect that, when the numbers print further from there, especially with the additional capital that Dolla had been taking on, we can expect that the analyzed figure is going to be roughly around 30 to 40% greater than the previous year they had. So we can look forward to that when they actually release the Q4 results, and then, you can have that expectation for what Dolla is going to be looking at going forward. So looking a little bit more into the statistics for Dolla, they had 4% expected credit losses. Well, they expect around 4% credit losses right now, with only 9%, less than a tenth of all the loans they've actually produced right now, being non-performing, or we could call it bad debt, with an efficiency rate of 49% and a total loan portfolio of around $2.6 billion. That is a giant in the microfinancing market, and only has further to go as long as they still have access to capital that they can, on lend at a higher rate, right? Total cash and cash equivalents of $62 million. There's a lot of capital that they have, well, dry power that they have to further on lend to further clients. It'll be business loans or corporate loans, and I'll get back to that in a second. So I really just want to tap back a little bit further. So at the end of December 2021, Dolla had a $750 million loan book at the time, generating around $370 million in interest income and $129 million in net profit. That's a 34% profit margin. Since then, Dolla has grown exponentially under dynamic leadership, where their loan book has ballooned, as I said earlier, to $2.6 billion, with $891 million in interest income and $328 million in net profit. 36%, they're still maintaining their margins after all this time. And this is just for the three quarters of the 2023 financial year, so you can only imagine for the fourth quarter, all right? So in less than 2 years, that would have almost tripled the size of their entire business based on all the factors I just highlighted. This has been possible through aggressive raising of capital and further lending to clients via whether it be personal, commercial loans, and most recently through, a $500 million debt raise secured through the EBJ financing that we would have arranged for them. Dolla is absolutely exponentially growing the size of their loan book and is only getting more aggressive as time goes on. So right now there are around 10 branches across Jamaica and 2 wholly owned subsidiaries, Dolla Guyana, which hasn't really taken off just as yet, and Ultra Financier Limited. And to succinctly describe Ultra Financier, I said they're Dolla's medium-term hidden weapon. To me, it was almost created in response to the growing interest in private credit that we're seeing in our local market and the growing legislation in the space. So while Dolla's operation is bound by the Microcredit Act as a microlender, which specifies who or how Dolla can lend out their money, Ultra lends to accredited investors using luxury high market value assets to provide capital to those who need it quickly without going through the strenuous banking processes that you and I would be used to in that matter. It's a lot more agile. And they have a loan book of currently north of around $700 million, which is roughly where Dolla's loan book was when they listed. So I just like to say, let's imagine a world in 2024 where in the second quarter this year, the government has announced its new budget. It proposes an increase for the junior market limit, and maybe a quarter or two later, interest rates have dipped a notch, signaling to the market that we're heading back to an aggressive equities market. And then Dolla sells, let's say, 20% of Ultra directly out to the junior market via spin-off, providing fresh capital for Dolla, reduces the tax burden on Ultra, and provides even more opportunities to earn for you and I, especially if there's already a benefit to already owning Dolla Financial shares. So I do think Dolla has a lot of opportunities to grow right now, and it's only getting more apparent as they continue to raise capital and expand their operations. So Dolla's quarterly profit movement is gradually growing further and further, doing roughly around $100 million per quarter comfortably right now, with only further to go from here. And then finally getting to the stock price movement, starting around $3 at the end of Q1 2023, and settling off after a bit of ups and downs to around $2.65 on average right now. And as I said, at a 15 times PE right now, a little bit below the junior market average. They already understand that they've been growing their loan book exponentially, got access to capital late last year, and they can continue on lending it out right now. They cannot understand where Dolla is going to be headed. So to me, it's truly a growth stock. The signs are already out there, and we can only expect to see more from Dolla going further from now. I would recommend it as a buy. Dan, any further words on Dolla right now?
Great, Justin. So I think we declared the conflict in relation to Mayberry's ownership in Dolla and that big transaction that we did last year. Mm-hmm. It shows how bullish we are in the company. I love companies like this that make promises of how they're going to grow and then deliver. And, Dolla is exactly that. And with the great leadership team they have on board, I have no doubt that they will continue to grow. I expect them to grow this loan book by a further $2 billion over the next year and see profits grow accordingly, with them making at least a 30% spread on that $2 billion. Despite interest rates in general trending down in the market, these guys know how to execute loans and how to control their ECLs to less than 5% and their NPLs to less than 10%. So it's great business. They clearly have a good credit model, great way of assessing, great way of deploying capital, and keeping the quality of their loan defaults down while doing that. So definitely they've demonstrated the greatest growth we've seen in the last 3 years. I don't see it slowing down for the next 3 years. So I think it's definitely a buy. I expect to see the stock price up by 100% over the next 24 months if we have our way and if they perform. And I have no doubt that Ken Roy and the team, the great team over there at Dolla, will continue to do well. So I'm on board as well too. Conflicts declared, but I think it's a great stock, and the proof of the pudding is in the eating. We look forward to seeing the fourth quarter full year results where we expect to see continued growth. And I think the quarterly hurdle is going to have to get up to $125 million a quarter in a hurry, ultimately to $150 million. I think they'll do $600 million in profit for the next full financial year. That's the target we're setting for you, Dolla. Okay, great job, guys. Okay, on to the next one. I think up next, we're going to take a look at Express Catering Limited. Great. So let me tell you why Express is one of three stocks that you must have if you're serious about tourism in Jamaica. There are really only three serious choices, and I like them all. CPJ, for sure, my favorite, followed by Express Catering, and then Dolphin. But let's talk specifically about Express. Now, Jamaica is just doing exceptionally well in terms of tourism, and I'm going to start off on the second slide to demonstrate that, just to show visitor arrivals in Jamaica, and the fact that we are actually forecasting for the calendar year 2023 to actually return to pre-pandemic levels, and with over 5,000 hotel rooms coming in the next 2 to 3 years, and 10,000 hotel rooms coming in the next 5 years, I only see, tourism and tourism-linked companies growing from strength to strength. Now, in the case of Express Catering Limited, this company IPO'd in 2017 at $1.50 when they first made it available to the market, and we've seen the company sort of just grow from strength to strength. They're positioned in the Montego Bay Airport, Sciences International Airport, in the post-security area. They essentially have the monopoly of all of the food and beverage services and have up to about 20 different solutions, including their own brands as well as some international brands like Starbucks and quite a few others, just to name a few, Wendy's, quite a few great franchises there. And the tourism arrivals, specifically at Sciences International Airport, where about 70% of all our traffic goes, is just growing and growing as that airport continues to expand and grow the size of the terminal and the offerings that they have. So well positioned in tourism, in great location where they essentially have the monopoly over food and beverage, and up to about 17 to 20 great food and beverage solutions. So as tourism grows, as we have more guests flying into Jamaica and through Sciences International Airport, the potential for this business to grow is substantial. Now let's take a look at the results that just came out for the half year ended November 2023. We see where revenues were up by 27%, gross profit was up by 32%, operating profit was up by 22% because of a 37% increase in expenses. Net, the net profit was $1 million for the half year, or up 32%. And this again is demonstrating the recovery that they're making coming out of the pandemic, with tourism arrivals in the last quarter exceeding the previous quarter of the prior year. So that is to say November 2023's tourist arrivals for that quarter exceeded the November 22 quarter. Now, has Express gotten back to full potential? No. We saw where they made profits of $3.5 to $3.7 million after tax in 2018 and 2019 respectively. So this is a company, in my opinion, as they roll out, will get back to making $4 million profit per annum going forward. We saw their finance costs, for instance, increasing by 14% year over year. And we know that they have relatively expensive debt at about 12% all in US dollar terms. And I believe, going forward with interest rates likely to trend down this year, we think the US Fed may have up to 6 cut price reductions this year. There's no doubt in my mind that there's going to be a great opportunity for Express to refinance their balance sheet, lower their interest cost. And with the tourism growing, I also expect to see profitability improving. So at the existing profit rate, they had trailing earnings of $459 million, stock price of $3.73. That translates into a price to earnings ratio of 13.30. So it's trading a little bit cheap just now. Junior market average is more like 16 to 17 times. And again, as interest rates trend down later on the year, I expect average PEs to increase because of the inverse relationship between interest rates and PE ratios. So there's no doubt in my mind that PEs will be trending up this year. I expect to see increases starting in the April to May period, and certainly in the second half of the year to see PEs trading up and lots of stock prices booming, including Express Catering Limited. So great room for growth. Good business. We see how they've grown their assets by 5% up to $44 million US dollars. Substantial growth in equity because the profit's starting to come back. They really got hammered during the 2-year COVID period when there was very little activity. But now we're out of that pandemic and we see these guys bouncing back, and it's only going to get better. Next slide, which is the one that shows profitability. Second quarter, which is the November quarter, is actually the slowest period for Express Catering Limited. So we see profitability fell in that quarter to $190,000 US dollars, but still better than prior year, which was better than the prior year before that, which was better than the prior period before that. So 2 hard years behind us, and it's only going to get better. I look forward to their January quarter, which is third quarter, which is likely to be their strongest quarter. And so they're going to drop this low earnings, 190,000, and likely replace it with a quarter where they make around about 800,000 US, and in that way you're going to see the trailing earnings spike substantially and the PE fall substantially going forward. So I think as soon as the next quarter falls out, if the share price were not to move, the PE would fall to actually 12 times, which would be way below the junior market average. So I think stock price is going to jump once the next quarter results comes out, and it's only going to get better over time. Looking at the stock price, we can see that this stock has been trading at a sort of, in terms of the last 52 weeks, it's had a high of $5.95 and a low of $3.50. So again, at $3.73, it's very close to the low, the 52-week low. And I expect to see the stock price trending up to $5 in the next 2 to 3 quarters. So it's a great buy at $4 or lower. You'll easily make 25% gains this year as interest rates go down, PE goes up, their third quarter results come out, and we see these guys growing from strength to strength on the back of the growth in tourism. So that's my view. Definitely a buy for me. Justin, what are your thoughts?
All right, Dan. Yeah, I'm definitely liking the prospects that ECL have going forward right now, with consistent increases in terms of tourism arrivals, stopovers in the Montego Bay, Jamaica airport. And we have the upgrades that we're going to have in the Montego Bay, Jamaica airport right now. There's going to be a lot more stores. There are going to be a lot more opportunities for the arrivals to spend a lot more with ECL. So right now, I believe each passenger that comes through, the average spend is around $9.48 per passenger per quarter. So with only more opportunities from them there, with more familiar brands that they're more used to, we can expect them to spend some more money there, maybe even like a 10 to 20% increase by the end of this financial year. We Jamaica right now, it's bringing in more people more and more. The prospects are always here. The carnival season is growing. A lot of things are growing with the Montego Bay Jamaica Airport bringing over 90% of the tourism arrivals as far as airlines go. So yeah, I agree with that, Dan.
Okay, well, looks like we're both aligned, and we've got 2 buy recommendations for you folks today, both Express Catering, if you want to get some tourism exposure and want to make an easy 25% gain this year, and Dolla Financial Services Limited, the fastest and biggest growing micro-lending company in Jamaica. Well, that's it for today's discussions. I'd like to thank our viewers, as usual, for tuning in today. Your support is always appreciated. I'd also like to thank my co-host and panelist, Justin Scott, for his invaluable insights. Thanks, Justin. If you're curious about our updates on our virtual investor forum and our other updates, then find us on social media. We share our live stream dates and upcoming guests on our social media pages. Give us a follow and stay on top of all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Click the bell to receive all of our notifications. Well, that's it for today, folks. Remember to keep safe, and remember, wise investors, slow and steady wins the race. Goodbye.